Well, hello traders and welcome out and welcome to your another currency recap. This is Sockets from Maverick Currencies and let's begin our market coverage for Monday, March 20th. We've seen a bit of a retracement in the markets today, so let's take a look at the overall performance and markets just sort of reversing some of the moves that we saw on Friday. Still to note that we are still holding on to those massive moves that we saw last week, especially in the cryptos, especially in the gold. So S&P it rallied 0.94%, World Stock Index up 0.75%. Then again, cryptos and gold, small movements compared to those double-digit movements that we saw there in the crypto markets. And gold was up 6%, so it only gave a little bit of its move. Oil also was down 13% and only reclaiming 2% off of it. So we still have a lot to go through this week as we get closer to the FOMC rate statement on Wednesday. Until then, this is a range-bound market price action. We have the resistance, we have the support, and you can see the moving averages are not really big help here. This is a very messy looking chart. So this is what happens when we get sideways price action. We start to get a messy looking chart, but this is where you need to sort of respect the support or resistance level and use those expectations accordingly. Same thing with the World Stock Index, slightly underperforming the US equities, but following the same sort of cycle here. Now looking at the cryptos, even though with the massive rally in the cryptos, we are up against a very massive resistance as well. So Bitcoin is the only cryptocurrency that has really cleared out some of the key resistance level, but collectively we still have to clear out this level, and we are just sort of sideways here. But we need to, if you want to be very much on the long side, that we need to wait for that confirmation to the upside. But at the resistance level, this is where we can sort of go sideways for a little bit before we can break out one way or the other. Now, let's take a look at the percentage changes today in both the crypto markets and foreign currency. Let's start with the crypto here. So I find it impressive that the Bitcoin is holding on to most of its gains. It's only down 0.18%. And this is where it's maybe just telling us that it's not ready to roll over yet. So some consolidations, that's what is expected. And like I said, on Wednesday when we get the Fed, I think after that it will clear things up and we'll probably see a bigger movements there. But one thing to note is that outside of the Bitcoin, other currencies, cryptocurrencies are not doing as well as the Bitcoin. Litecoin being the worst currency, cryptocurrency followed by Ethereum and the Bitcoin Cash here. So Bitcoin is really where the money is flocking into. Now, looking at the currency world, decent movement across the board. And I must highlight that the Swiss franc actually looking a lot better onto the short side. So this is, again, the top currency that I like on the further short side. But outside of that, dollar and the yen holding in a small little range here. This, again, will be a bigger currency pair to trade on Wednesday. Usually, I really like trading this around those Fed events. And outside of that, one thing to note is that the only better looking currency right now is the euro and the pound. The growth currencies like CAD, Aussie, and Kiwi, not so well. I mean, I was surprised with the Kiwi weakness because Kiwi actually performed really well last week. But overall, this is just telling you, if you look at the daily chart, some of the daily charts are not looking so good for some of the growth currencies. So these are just short-term movements. So you don't want to be married to a long-term outlook here. And things can change very, very quickly as we get more data and more central banks out of the way. Now, looking at the market outlook, we're still sitting at a -1. But like I said, when you're slightly bearish, you're slightly bullish. This is not the time to be extra bullish or extra bearish until we clear out these technical ranges. Now, looking at the calendar, very busy week. So tomorrow we have the Canadian CPI due, and this will be, again, one of the currencies that I'll be watching for a possible trade. CAD has been overall in a sideways to weaker trend, but we have to see what the CPI is telling us. Again, the expectation is not to change too much. Again, in line with the expectation with the month over month. And this is where if there's a big change or surprise, that's where we see a big move. But since the Canadian dollar will be watching tomorrow. But the main highlight will be on Wednesday when we get the Fed. And after that, we have a whole lot of data to go through. So we'll be uncovering that throughout the week as the week progresses. So let's do a quick currency analysis and take a look at the velocity scores. So one thing to note that we have a good velocity in Swiss franc and a good little trending score on the Swiss franc as well to the downside. But outside of that, you can see the Kiwi is in negative momentum, but it has a better trend score. So it's a 0. I'm not really interested in the Kiwi here. Dollar, like I said, would be a better play after Wednesday. Until then, I expect the dollar to kind of stay within this smaller range. Growth currencies, again, Aussie catching a small bounce, but it still looks very weak. Canadian dollar with a +1, but the trend score is not that great. So this is the currency that is just moving in between the support and resistance level. So we want to continue trading that until it breaks one way or the other. The yen, on the other hand, is acting as a decent safe haven currency. Same thing we happened last week when every time market pulled back, the yen rallied. Every time yen rallied or yen pulled back, again, markets were able to rally. So we're seeing that a little bit of a correlation there. So we need to continue paying attention to that. And I really like euro and the pound here. These are the two currencies that is showing better scoring across the board. So let's do a quick possible trades. Take a look at what's looking the best here as far as the charting goes. I'll be starting with Swiss franc because take a look at Swiss franc. I mean, we've had a massive breakout after consolidating for 6 months, and you can see that we have fallen below. So at this point, we are still hovering around the upper end of the range. I would expect this to get towards the lower end of the range, but I do like the Swiss franc to the downside. I mean, take a look at Swiss franc. This has been one of more resilient currencies that we have seen in the past year. I mean, we have seen dollar pull back after being very strong, as you can see. Dollar pull back after being very strong for the whole part of the year. But right now, we are not really seeing that here. And that's exactly, I think, the Swiss franc is following that suit here. So we'll be taking a look at Swiss franc on the downside. And what do you want to pair it with? Let's take a look at euro against the Swiss franc. This is the one currency pair that I do like, especially getting closer to the parity level. You can see this is the parity level right here at 1. And as it gets above that, I think can easily reclaim above that 101 or get above 102. I mean, same time last year we were sitting at 104, and this has been really not gone anywhere for the last 6 months. But I think at this point it has a chance to break out if this sort of correlation continues on. Now the same thing goes with pound Swiss franc. That's another pair that I do like on a technical basis because it just broke that 200 moving average. As you can see that we haven't really broken above the 200 moving average for our longest period of time. So in that case, I mean, take a look at all charts, 4-hour chart to a daily chart. I mean, they all seems like they want to go higher. So any sort of pullback, any of these currency pairs, I like it further on a break to the upside. If the yen picks up, I mean, we can take a look at Swiss franc yen. I mean, same thing. This currency pair has done really well, but now it's below the 20, 50, and the 200 moving average, just right here. So pay attention to this area. I do like it further to the downside. Again, this is all about which currency would be the best once the Swiss franc continues to slide here, and a lot of these currency pairs looks appealing here. Same thing, we can do the same analysis against CAD Swiss franc. I mean, this thing has been the weakest here as well, and it's trying to reclaim this area that it lost. So this is, again, a good sign, and I think in the coming weeks, we can see some of these currency pairs rise as well. The only problem with these growth currencies is that we just don't have a good trending score. But even though on a chart basis, you can see they are recovering some of that level. So if you're seeing good movements in some of the growth currencies, I think we can pair them accordingly. In the European session, maybe we can just look into some of those euro and the pound crosses as well. The Kiwi was really a bit of a unexpected move this so far today, but again, if you take a look at the trending score, this is what I want everyone to pay attention to is what's the trend score. This is a +1. That's why you don't want to be as aggressively bullish or bearish on this. Whenever you see this, you want to be right in the middle, which means that if it's doing well, I want to be on the long side. If it's not doing well, I want to be either on the sideline or play the downside. When you see an aggressive movement like this is where you want to be aggressively long. You want to be using a legging in strategy. You want to be holding those trades for much longer. But you can see in this case, It doesn't. If you are holding the trades for longer, they're just not going anywhere. So pay attention to that. But again, like I said, Swiss franc is really what I like the most here. It just really depends which currency pair we want to be, using. If you look at the dollar, this is another one I want to talk about. I mean, dollar is just right in the middle point of the February lows that we had early February, and we've seen a nice rally. So if you look at the Fibonacci retracement, we are sitting at about just a 50%. It's a level here. So at this point, dollar can really go anywhere. But I think for that, we need to wait. We need to wait till Wednesday for that. After that, I think either we will get a push to the downside or we'll probably recover and go higher. So that will be a very crucial moment for the markets or for the Fed, what they decide to do. Bear rallies to come in, but I think overall you want to make sure that you're not too aggressively on either direction. But in between, there are plenty of opportunities to be had. And make sure you're also focusing on what currencies in play. Without a good trending score, a strong trending score, we want to make sure that whatever we are trading is moving, because a lot of times things go sideways, but there's always something happening somewhere else. So focus on what's moving. Until then, take care, and we'll be seeing you in the next update. Cheers.